Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here we are looking at the weekly time frame, having closed the week at a price of $4.44, being up almost 4% on the day, and being up about 3.25% over the course of the week, being green as you can see. And looking at the weekly candles here, we really have just been consolidating the past few weeks. I think you could make a case that it is bullish consolidation, having these two green candles up and then consolidation over here. Being a bull flag, but I think you could also make the argument that this is bearish consolidation with these big wicks up here and, price being drawn down over the course of those weeks and consolidating. So that could be a bear flag or bearish consolidation. But what I find more exciting is to look at this on the daily time frame, as I do think that looks a little bit more bullish. And so looking at this here, we can see the past 5 trading days. We did get this big red candle down last Friday on March 8th, being down about 6.5% on the day, and then we did consolidate over the course of this week. So one might think that is bearish consolidation or a bear flag. However, the green price action that we got on the day today, Friday, March 15th, could suggest that this is not bearish consolidation, as we did see a bullish engulfing candle here on Friday, being up almost 4% on the day, like I had said. But one thing maybe does not look so good about the close of the day is that on the 13th, so Wednesday, we did get a high over the course of that day at a price of $4.45. So our close today for the week is just below that. And so I do think it would suggest a little bit more strength if we were getting closes above these wicks that we had seen earlier in the week, with the high of Monday, March 11th, being at a price of $4.50. So it is unfortunate that we could not close above either of those levels. And also on the note of $4.50, if I do switch over to the max pain here, we can see that for Friday, March 15th, the max pain was $4.50. And it is also $4.50 for next week. So it is unfortunate that we could not close above that level. Also continuing down a little bit in the after hours, being down just over about 0.5% in the after hours. But with this bullish engulfing candle, I do think that could suggest a turnaround into next week. Also, I do think that we did reclaim a level, perhaps 2, that might be significant. So I'm just going to throw up some lines that I have drawn that could suggest, that we are going to see some strength into next week. And so one of those levels that we did reclaim was the 236 from this retracement from the high that was hit on March 7th, coming down to the low that was hit yesterday on March 14th. And so from that range, the 236 is at a price of $4.34.2. So it is great that we were able to reclaim that today. However, we did fall a little shy of the 382, which is at a price of $4.44.9, right around $4.45, corresponding with Wednesday's high. So it would have been nice if we could have closed above that level, but at least we were able to reclaim the 236, so I do think that is good. And also, I do think it was good that we were able to test the 50% retracement at a price of $4.53.5. We did get a wick high on the day of $4.54. Unfortunately, we were rejected from that level, as well as the 382, but at least we did reclaim one level. Also, I do find it interesting, this uptrend that I believe I drew in last week's video. It might have been the week before, based on the all-time low at $3.58.5, hit on February 6th, and then also the low hit on March 4th, being at a price of $4.12, marked by this orange line. Based on those two pivot points, the low that was hit on March 8th also seems to correspond with that line. We did get a couple wicks below it the following two trading days, so the first two trading days of this week, Monday and Tuesday. And then we did start to break below it Wednesday and Thursday. And so Thursday we did hit a low of $4.17. It did look like we were starting to break below that uptrend, but on Friday we were able to reclaim it. So I do think that suggests a lot of strength. However, this uptrend is pretty steep, so I do feel like it is unlikely we will hold it next week, but it is quite possible. It is quite possible we could be heading up to these higher levels in this Fibonacci retracement, perhaps reclaiming the 786 at around $4.75. But really, I do think it would be good to just be stair-stepping our way up this retracement. So if we could start to see some closes next week above 445, above 454, and above the 618 here at a price of $4.62.1. If we could get a close above 463 next week, I think that would be excellent. But, we will have to look for these levels. Hopefully we are able to hold 434 as support and really just start to stair step our way up these levels. I think that would be great. And if we could reclaim this previous high of $5.10, marked by the yellow line, that was hit on February 28th. And so if we could get above that next week, that would be excellent. But it might take another week beyond that, maybe another week after that. And so really, as we do hopefully make our way up next week, hopefully we are able to reclaim a number of these levels and eventually work our way back up to $5.10. And I should note also the close on that day of February 28th was $4.99, so just below the psychological level of $5 a share. So, that would be another great level to close above. But ideally, we need to be getting two consecutive closes above $5.10. Because then that would suggest that there are still buyers stepping in above $5.10, that there is bullish momentum in the stock price, and that we could start to move higher, like potentially up to the 1618 extension from this retracement at a price of right around $5.35. And also, as we do step back, I do want to point out that we are still trading in this downtrending channel that we have resided in for, the majority of the year. So I do think that is good. And one thing that might be nice for me to do for next week's video is to extend this channel to the base here, and perhaps we could look at how price is residing around the midpoint of this channel. I do think that would be quite telling. So yeah, I'll have to do that for next week's video. But all I have to say about the stock right now is that, I still like it. And, I'm happy to buy at a discount, whether that's below 450 or, at the lows of the past week at 417. I still think it's a steal. I do think that we will be seeing prices moving higher than $5 a share, potentially up to $8 a share in the next few weeks, maybe the next month or two. So yeah, I do think that this is a great time to be accumulating. And before I do close this, I do want to note, I had mentioned it might look like a bull flag, and I do think looking at it on the daily time frame, we do have this move up here ranging from really the low of February 5th, the all-time low February 6th, moving up to the high here around February 15th. We do have consolidation over here that is downtrending, which could suggest that that is a bull flag, and we are really just waiting to break out, not fake out, but break out to the upside and reclaim at $5.10. So I think it's going to happen sooner than later. So I'm just feeling good about it, and I just wanted to share that with you. Hope you all have a great weekend, and I'm looking forward to seeing what happens on Monday. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.